Hi, I'm Canna and welcome back to the Sass quarterly market update for 2011. We've got lots of information to cover, so let's waste no time and get straight into it. First of all, we've witnessed the aggressive return of volatility hitting our markets since mid-August. The herd mentality has definitely made its presence, with markets falling sharply in both the US and Europe. However, proactive action was taken immediately. The US Federal Reserve, Bank of England and European Central Bank all stepped up to the plate, looking together to form some sort of resolution. The Fed started selling shorter dated bonds to help keep interest rates low in the US. The European Central Bank resumed the purchasing power of covered bonds as well as liquidity extending. If we look back in history, we can see that the world has experienced wars, terrorist attacks, market crashes, economic crises. But we can see that the world does actually continue on day by day. And from a long-term perspective, the market trend is definitely positive and upwards. Often these times, dubbed by the media as the worst economic crises ever, end up being the most astounding long-term buying opportunities. Remember, with volatility comes opportunity, so use this to your advantage. History shows us that the share market normally precedes the economy. So trying to pick the bottom is not only expensive and dangerous, it may end up costing you a lot of time and money. Invest for the long run, sit through the volatility and don't act upon the fear. Now closer to home, it looks like China has their inflation levels under control, with the latest data indicating the government is on the right track with controlling the risk of overheating their expanding economy, while Japan has equally important and positive economic data showing signals of a strong recovery since the tsunami hit the country in March 2011. In Australia, the RBA have left interest rates unchanged again, with the inflation rate sitting at 2.5%. While this is slightly lower than the comfort zone for the RBA, more and more economists are predicting an interest rate cut coming our way on Melbourne Cup Day. There is actually another argument that the RBA will not cut interest rates. The fact that interest rates have remained unchanged may be enough to stimulate the economy. There is a concern that if the RBA were to cut interest rates, it would overstimulate the economy and the RBA would have to quickly increase the interest rates shortly after. Nonetheless, if interest rates come off next month or next year, make sure you use this to your advantage. Increase or maintain your mortgage repayments to the best of your ability. This will save you valuable time and interest and will actually mean you're one step closer to creating financial freedom for you and your family. One of the keys to wealth creation is to minimize your personal debt and invest in two-dimensional assets that provide you with long-term capital growth and passive income. Now, this actually reminds me of the importance of starting early in life when it comes to your finances. Recently at Sass, we've expanded our client base to include young working professionals who are keen to get ahead financially and set themselves up for life. In designing different wealth creation strategies for Australians, it never ceases to amaze us at the long-term, powerful effects of compounding interest, especially when you back this up with time and action. Starting earlier in life really does pay off, and it's amazing what you can achieve when you put your mind to it. I would like to show you an example of one of our newest clients that's just joined Sass. Let me show you what we're doing. One of our newest clients just joined Sass, aged 28, came to us wanting to retire at age 60 on $150,000 a year in today's dollars. We worked out that due to the long-term effects of inflation, $150,000 a year is actually going to be about $386,000 a year in 32 years' time. We just assumed a simple inflation level of 3% per annum. However, that meant that our client will need at least $6 million in his superannuation account at age 60. Initially, this looked like an intimidating challenge, but when we combined a few different strategies incorporating his superannuation and a new share portfolio, this client is actually realistically going to retire on time and with a comfortable portfolio in excess of $6 million. You would be inspired to see how effective small and regular contributions can help you in getting where you want to be financially. It's never too late to take your finances seriously. If you're interested in any of the information we've covered today or want to know more about what you can be doing yourself to get on the path of financial freedom, feel free to contact us. Otherwise, that wraps up everything we have for today. Thank you for your time. I look forward to catching up with you at our next Sass quarterly market update. Bye for now.